Sir Isaac Newton once said, "I could calculate the movements of the heavenly stars, but not the madness of people." What is the profile of investors' behavior? How do we choose to remember or forget? Dave Duley here with Georgia Advisor Group, giving you sound advice on how to take emotions out of disciplined investing. Stay tuned here for a few minutes and understand why 75% of investors underperform market averages by letting fear and greed get in the way of sound principles. Selective memory, recency bias, loss aversion, regret aversion, anchoring, and all forms of human behavior that has been built into our brains over thousands of years of adaptation to our environment. But most are counterproductive. Timing the market or any individual stock is a losing proposition, and those with long-term investment horizons have been able to ride out short-term market volatility with dynamic results. Now let's take the S&P 500 over the last 30 years. According to Macrobond, had you dropped $1 million in 30 years ago in 1991 and never made a move, in 2021, that value would be over $20 million. Now, had you missed just 10 of the best performing days each year, not weeks, just 10 days over 30 years, your return would be $6.8 million. That's right, you underperformed 300% of what the market would have done if you left things alone. Sound crazy? But it's a fact. In today's social platforms, there are two prevailing stances that drive bad decisions. One is optimism bias, and the other is negativity bias. Now, the former says, "I'm smarter than everybody else," and the investment impact is toward overconfidence and leads to excessive trading, and also leads to underperformance and a drag on results of timing the market, and it prevents you from using professionals to take over. The negativity bias proves the brain has a greater sensitivity to bad news, which is one reason newscasts and social media are filled with it all day, every day, and makes you want to stay clear of harm's way. That investor impact means there are always reasons not to invest, and I'll wait for better news on the horizon. But in most cases, they end up missing an opportunity. Bad news attracts people, but then it invokes fear into the equation. But look, all is not lost. The key is to have a plan that eliminates emotions. A plan removes emotions and creates a mechanism in avoiding missteps and reactions and ill-considered decisions. Now, here are questions to ask yourself. First, do I enjoy the day-to-day process of handling my investment portfolio? Now, this is a big one. If it is work or a need to prove my worth, or am I looking to save $1 on using professionals? Then you answered your own question. What do I know about this investment? Am I acting on word of mouth, maybe a herd mentality or particular insight into a company or its business? My video on Occam's razor would be a great video to go back and watch to help answer this last question. Now, you can find it on our website under the retirement videos. Do you actively seek out contrarian opinions when you do make choices? Do you stop, pause, and challenge your investment choices before making a final decision? What would change your mind to protect adverse outcomes? Are there other strategies to protect my portfolio without making rash decisions of completely getting out or trying to time the market, trying to get into a particular position? Finally, besides having a plan, is don't go it alone. Repeatedly, every study on not only money management and investments, but behavioral studies show using experienced professionals to confer with regularly and implement a disciplined approach will cause you to outperform 75% of the time, not only in life, but in your investments. The idea is no one can manage my accounts as well as I can is just plain wrong. And to say I can't afford to hire professionals will be proven by the returns over time by removing the emotional aspect of investing. If you're doing it yourself or currently have an investor, go see two others. Sit down, ask them specifically how they manage accounts. ask to see their personal investments accounts. It will tell a huge story. If your advisor won't show you their personal account, then run. Yeah, run as fast as you can. Listen, visit our website and subscribe to our newsletter, where you can get a video each week on great ideas for planning for the road ahead. You owe it to your family and, more importantly, to your peace of mind in today's markets and political landscape. Subscribe below, leave a comment. Till next time.